Well, the TSX Composite is sporting the 12th best year-to-date return of any stock market around the world. This is after logging its 12th straight day of gains. Now, over that span, Canadian stocks have rallied by more than 8%. To talk about where Canadian stocks go from here, I'm joined from the TSX by Diana Avigdor, Portfolio Manager and Head of Trading at Barometer Capital. Diana, thanks so much for being with us.
Good morning,
I first want to check in with you just about, when you talk about 12 straight days of gains, that's enough to signal that perhaps there's some euphoria in the market. There's a lot of enthusiasm and excitement. And the trading desks that I've been checking in with, they don't really feel that way. So I know we like to talk hard numbers and earnings expectations, but does this market feel as exciting as the numbers would indicate?
We have been through a period of extremes. The sell-off of fourth quarter 2018 had some extreme qualities to it, and so has the rebound off an oversold situation. The trading over the last 4 months in oil prices had extreme qualities to it, and so has the rebound. It is now consensus that we're going to stop here at resistance, technical resistance, and retest something. Whoever you speak to, depending on who you speak to, some will say partial comeback down, and some will say we're going back to 2,200 on the S&P. What I want to point out is that this is a very big consensus call. It's unlikely it's going to work out so orderly and into everyone's positioning. Markets never do that. So the truth will be, in my opinion, somewhere in the middle. It's possible that we pause here a little bit, but we'll have to see what the actual macro data is going to bring. We are in a bit of a blind spot. The government shutdown has stopped economic data from coming out, or some of it. And we have earnings season where the expectations have been really taken down, so we could be set up for a better setup. So we'll have to watch these moving parts, but the consensus doesn't always work out as orderly as you would expect.
So how should we interpret that? I'm hearing you saying that everybody seems to be on one side, that there's this disbelief in the rally. Does that create an opportunity to be contrarian?
It does, in my opinion. It does create an opportunity to be contrarian. And, you look at the Canadian market, it's been up so many days, and really aided by some of the regular things like banks, yield proxies. But the Canadian dollar, the fact that it has gone down so much, weakened so much, and now it's stabilized, it really is a double support for the Canadian market in terms of having on the one side a really good energy setup, oil price and so forth. With the stability in the Canadian dollar, it does bring in foreign eyes into a market that tends to be, on the margin, a risk-on type of market for outsiders. So Canada tends to be a risk-on allocation. For us, it's our home market. But for the foreign market, it's a risk-on allocation.
Is that kind of spelled out? I mean, earlier we were taking a look at the best performing markets so far year to date. And when you look at the pack that the TSX is running with in those top contenders, you've got the Russian market, the Pakistan market, the Brazil market, the Austrian market. These are all emerging kind of nascent markets. Is that how the TSX is being treated? It doesn't seem like it's being lumped in the league of, the big indices like the S&P 500.
Yeah, so, the one common denominator in all of that is the local currency vis-a-vis the U.S. dollar. So as an export-oriented country, neighbor to the U.S., our currency is and a smaller economy with a smaller stock market that requires international eyes to be more robust. Our currency is very, very important. If you're an outsider and you want to invest in a Canadian company, your return is made up of two things. One is the stock return, and one is your currency exposure, because you have to buy Canadian dollars to buy that Royal Bank or to buy that Suncor. So, if the stock goes up but the currency goes down, your net is zero. So all these markets are connected through the fact that a weaker U.S. dollar is probably beneficial in balance. I'm just saying it from this level of Canadian dollar where it is. And also, there seems to be a lack of negative headlines as it relates to energy policies and so forth, which over last year have been quite an irritant to this sector.
Are you seeing that when we talked about this going into this segment, this notion that perhaps there's now foreign interest coming to the energy sector? Are you seeing that in a material way, and how confident are you that that money will stick around? Because the theme, and you know this, the narrative has been foreign money is fleeing, and if they want to buy energy, why not just buy in the United States where there's not that extra issue of takeaway capacity?
I think that our relative valuations and the risk parameters around our country, both in terms of energy policy friendliness and the oil price sell-off of fourth quarter, has really rendered some of these companies very cheap. So, like I said, Canada is a risk allocation in a global portfolio. So if you feel more comfortable about risk in oil, you might feel that you get a bigger bang in terms of return by coming into the Canadian companies. But your point is well taken. You said that, is this sticky money or will it flee out at the first sign of trouble? I think yes, it flees out at the first sign of trouble, as there are less volatile options out there for this sector. So for now, I think that even local investors have increased their allocations to a sector that has really underperformed. Among other sectors, like for example, some other risk sectors in Canada are the cannabis sector.
Yeah.
But you can't compare. So both oil and cannabis, they're both riskier than a utility or a bank. So if you're going to allocate money or a small portion of your portfolio to something more risky that has more torque, that has the potential of giving you a higher return, you might first go to the energy sector and then the cannabis in terms of the risk allocation. Cannabis has gone down a lot more, but has rallied a lot more. So you can see the risk tail. So you have to be careful on how you allocate your money. Maybe you want a smaller portion to one than the other. So the Canadian investor in the energy sector is a little more stable, but all of these risk sectors tend to have less sticky money than some of the yield, more solid yield generating stocks. And a lot of people in the fourth quarter have had to reassess the risk tolerance. Sometimes you know your real risk tolerance only when the markets do a little number on you like this.